I'm really hoping that what we see here is a higher low rather than a similar low to the lows that we've seen back here in March. First is we're looking at the 5,750. That's roughly where this green arrow is here. So it falls back down to this range and next recovery. That would really be a preferred type of situation. But I think the sweet spot for a higher low W would really be on the next two sides of support, which is between 5,300 and 5,010. Okay, so in line with that, let's begin first on how the markets have fared. You can see from the chart over here that the Shanghai index so far has led the advance in terms of a year-to-date performance, followed by the S&P 500, the MSCI Emerging Market Fund, and the MSCI World Index. Unfortunately, if you look at the Philippine conditions, we're actually quite lagging into the lower end of this range. And that is really something that we really have to be very, very watchful of, because as the other markets have rallied quite a substantial amount, we remain to be quite stuck into this consolidation that we have. And looking into the U.S. market, we look at one of the biggest markets in the world because we just want to make sure that we don't have to be able to face anything crucial. Right now, the S&P 500 have just recently broken through this recent high that it's made back in June. However, it did experience some volatility today, especially when, of course, news about this tit for tat that was taking place between China. And the other concern we do have also is that momentum seems to be slowing down a bit despite this new high it made from this point. And we also have a major high standing right in front of it at 3,400, which means that you got major resistance nearby. And given that concern, we're very much watchful to see just in case these things break before the lower ends of this range, because if they do, then that would mean that we may have to be able to face a wider corrective conditions. But so far, support has not broken, and given that condition, everything still seems to be okay, but we need to be very watchful of this. Another concern I have is if you look at the 10-year yield into the U.S., we've noticed that yields have been a consolidation, and this consolidation is actually starting to wind down, nearing off the lows that we've seen back in April. And this does not make it seem too comfortable, because we're now testing those major support levels, since we do see a crack of that. And that would just simply tell you that it seems that people are getting edgy once again. And normally the tendency for this is to pull down when you have those concerns raised up. So we would like this to be in the middle of the range, but right now we're in the lower end of the range, and that means that we're in a market that's starting to feel edgy once again. In terms of the impact on the US dollar, the dollar hasn't done very well recently. After shooting up to a very high point here in mid-2000 or early of the first half, we just saw a shove down into the US dollar, and now it's trending down. It's broken through several trend line support areas, and this would mean that the dollar index may find its way maybe closer to the next support, which is standing right here, and that would be closer to about 93.90. So the weakness in the dollar looks like it will persist, although it is a little bit oversold. It could rally a little bit, but that does not change that the downturn is still intact. In terms of the peso-dollar rate, I think the peso is also benefiting from the weak dollar that we've had, and that's why. And we've seen the peso relatively strong, and I think April also explained to you the reason why. And given that context, there's a possibility that we could see the peso try to navigate towards the lower end of the channel range, and that's closer to about 49.20. And if it manages to be able to do this, it might also start to be able to dwell on some oversold conditions, which might allow it to be able to generate some rally, but only into the short term. And I would really suggest that these rallies should be used as positions to be able to sell the dollar. In terms of the gold seems to be doing quite well because it is detecting the weakness into the dollar, and this apparent safety mechanism, which is the reserve currency in gold, is the one that's been jumping up quite fast as well. But recently we've also hit overbought conditions, so maybe it can have another strong day, but I would anticipate that it should try to be able to generate some pause event sometime soon. It could also be agitated because of the issues that Boss Edward talked about earlier on with regard to the tensions between China and the US that could also cause that uneasiness. The oil market seems to be quite steady into its movement. It seems to be rallying into a wedge-like pattern, which I don't think is very nice, but we really have to be very watchful of this as well, because if we do see this break below the supportive line or this blue line at about 39, then we're probably going to see a much wider corrective movement. But right now, it's also getting some lift from the weakness into the dollar, because the tendency for gold and oil is to trade against the dollar. So the dollar's weak, and normally these guys are usually stronger. And given that context, the range is now tightening, and you can see the narrowing of these two spots here. And that means that any moment now we're going to get another major decision on oil prices. Now let's move towards the Philippine view. In the Philippine view, it really was quite a bit of a heavy decline that we've seen towards the March to today, and we've seen a harrowing fall when the index broke through that 7250 marker, where it just plummeted and made a rebound. And the rebound just happened to hit the 50% or close to the 50% Fibonacci marker. And this is an anticipated heavier level of resistance where we would anticipate to encounter that heaviness in terms of supply. Looking at this in a shorter period, this chart here on the right side, you can currently see that our index is actually stuck within a reactive channel, and it's beginning to pull below this wider rally that we've actually been seeing. So this is creating some discomfort into the market, and more so that the prices are falling below all the moving averages now, which really is enticing more selling supply to come inside. And also, momentum indications are also pointing that this prolonged consolidation or correction is sapping the strength of the rally. And if this doesn't try to be able to undo this now by making a forceful rally, then it would succumb to the scenario that we've been talking about in a potential W formation that would come in. And I'll talk about that in a little bit. Now, contributing to the weakness that we've been seeing, lower volumes really have been plaguing our market for a while now. If you notice, after just maybe scoping a regular range, but here you can see volumes have really been trickling down to an incredibly low level. I'm talking between 3 and 4 billion a day, which is really, really very sparse. And that clearly is unbecoming of a market that's trying to make a rally, but is showing you a market that doesn't know what to do, or is sitting on a fence because they're trying to see what will be the next catalyst. And until I know, I'm not going to play a very aggressive game. Also, if you look at the foreign activity that we've been seeing the last 30 days, you can see that net foreign selling has been quite prevalent. And again, this is quite contributory to the fact that we're seeing that negative pressure into the market so far. And I can literally count maybe only 3 or maybe 4 days we've had net positive days so far in the last 30 days. So this too, again, is also contributing to the fact that pressure may really be unfolding into the market. Another thing that we also want to be able to consider is seasonality. I have here the chart on the left of the S&P 500, and I have here on the right the PSEI. And the bars that you see here, the bars that are stretching across a monthly situation. So these gray bars measures the performance of those index in the last 10 years. And just to be able to read to you, we normally see a very strong July period in the S&P 500. And you can see it's up about 80% of the time. And when it's up, it normally registers an average gain of about 1.7%. As against August, which is normally a weaker month, where it's only up 44% of the time, and normally gives an average gains of negative 0.9%, especially coming off a strong July. So we are a little bit worried that we might be coming to a period where the US market may need to be able to generate some corrective element. And if it does that, you know how they say, the US market sneezes, then everybody else gets sick. Now, in terms of the PCI, July was supposed to be one of the strongest months that we've normally had. 90% of our month in the last 10 years have actually recorded an upward situation, averaging about a 2.2% gain. Unfortunately, this time around in July, we're actually down about 2.8%, not counting today's move. And I'm also a bit worried that normally that August is also traditionally a weak period for us, but normally this happens because of the strong July. So um, if we don't have that and there could be some selling, maybe the impact into the downside may not be as big. However, my bigger threat really is what happens if the US begins to correct as it were to do seasonally, and would that have continuing effect to us? Because I find it very difficult that you have the US market falling down and generating a wider correction and we not get affected by that. So it's something that we're going to have to be able to be watchful of. In terms of the Philippine subsectors, also trying to see which ones are the stronger, weaker market subsectors, so I can get a feel of how established are we in terms of demand. And it's quite unfortunate that the weakest sectors we have are in the commercial industrials, the property, and the financial or the banking sector. And normally these three are really quite necessary in order to be able to lift the market because most of the heavyweights are here, except for, of course, SM, which is in the holding company here, and might be the only reason why the holding subsector here is quite strong. Also, the other one that's also stronger than this one's in the bottom are the mining, but again, we don't really see a heavy amount of activity being traded here. And services are actually strong because of the telcos that seem to be holding it. So there are a select only number of issues, while a wider number of issues are still on the weaker trend side. And again, that also generates some concern for me. Of course, the headwind we have, and as April pointed out, is the rise in COVID cases and the threat of whether we'd step back into the quarantine measures that we have. And it's really very difficult to ignore that you have a upsweeping situation into the cases, and the government may be hard pressed to be able to do that after, of course, getting into our GCQ here in Manila. And if that happens, then that would prolong the ability for society to get back into the normal groove of things. And again, clearly that's not going to be too much of an effect. And I think could have been the reason why 1 or 2 days ago that we saw the market quite jittery and have a intraday sell-off. All right, so earlier I talked about the W scenario. I've actually been writing about this in my tech spotlight for quite some time. And I'd like to just preview again the situation that I've been following. So the sample that I've actually been looking at was a sample taken by the German DAX back in 2016, where it too had a very, very sharp fall, made a recovery, had a three-stage recovery, and what we call an ABC. And then after that, it turned, made a lower high, and then eventually had this sell-off that you see in this red box. Now, I've been comparing the Philippine situation, which is here that you have into the right side, and as I've been actually going through this, I've just been marking out, copying what I've been seeing here, and although it's not absolutely identical, that the phase structures are quite similar and quite uncanny. And in fact, to the point that I've been expecting a lower high so far, we've seen the lower high come in here, and now we're seeing the arrest back down in prices, just like we're seeing here. In this part, we normally see an agitated decline because this is where a W formation tries to generate the second part of that W, or the right side of the W. And I'm really hoping that what we see here is a higher low rather than a similar low to the lows that we've seen back here in March. And so the scenarios we're playing out is that we will look at three zones of support to be able to have a look at it. First is we're looking at the 5,750. That's roughly where this green arrow is here. So it falls back down to the range and makes a recovery. That would really be a preferred type of situation. But I think the sweet spot for a higher low W would really be on the next two sides of support, which is between 5,300 and 5,010. So in this range here, I think this would be a more viable correction. That should put a lot more issues back to where they should be after this rally that we've seen. And it would also make April's target of potentially 7,000 also more, much more attractive if people are able to look for potential entry spots in here. What I hope does not happen and that we avoid is really a full-fledged retracement that goes all the way back down to the 4,500 low that we've seen here. I don't usually look at the intraday low we saw in March because that was only done by emotion. And so I look at the second low that was generated over here, which is roughly at 4.5, which is a much more stronger area of support. So if we can come around and to do any of these three support sites from these green ones or these two black arrows, then I think the market should still be relatively okay, although the market you might feel some pressure here as markets go back between 5.3 and 5,000. And again, remember, the objective over here is we think that we've seen the worst based on the last low that we've had, because at that time the market was pricing in what it could. But moving forward, we hope that not all businesses will be as badly affected, although there are that we still feel will show you. You also answered in the poll questions earlier that you anticipate businesses to only be rejuvenated maybe between 6 months, 1 year, or maybe longer. And that should really tell us that we should be rather defensive right now, not too all out aggressive based on these conditions. And clearly there's a potential for the market to retest before it attempts to be able to make another worthwhile recovery. So as we pointed out, the major markets have shown very different pictures, with the US being stronger, even Europe, parts of Asia, as against to the Philippines, which is on the weaker sides, that along with maybe Singapore. And we're a little worried that the US going into corrective phase maybe towards August might be a problem with us, because it might be difficult for us not to be able to join in that pressure. But hopefully, since we started our selling a little earlier, or we've stayed down here, that it will not generate a very, very heavy type of corrective bout. And potentially a possible W-like basing scenario is what we want to be able to see. We're talking about this on an index, not on all stocks, because as Mr. Lee pointed out earlier, some issues are making W's already right now. They're weaker, and they could even retest that low a third time, which is again another weaker possibility. But the reasons for our defensiveness really is the inability for our market to go over the 200-day moving average, which is blocked. The weak volumes that are still quite persistent. Net foreign selling. We also see the potential seasonality threat of the ghost month, which is a traditionally weak period. I would also attribute perhaps a new listings that might come out that might also sap the market's funding conditions. And of course, maybe even some banking stocks that are still not doing very well. As I showed you, the financial sector is one of the weakest subsectors that we looked at in the charts. And so we have to be able to build in the potential pullback phase that may come in at about this stage. And I really hope that 5,750 can be the end of it. But like I said, the sweet spot it really will be somewhere between 5.3 and 5,000 or 5,010, because these are stronger avenues of support, and I hope that these can carry the way. Now, I'd also like to be able to look into the conditions on IPOs, because in a sense we've got two upcoming ones towards this year, and I've been noticing a lot of people in some IPOs. They're struggling because they go through a usual pattern of behavior, and maybe not many of you are too prepared to be able to handle them. Now, if you guys are going to be traditional investors and you're planning to buy IPOs for, who knows, maybe the 1 to 5, 10 years, then you can ignore what I'm about to say. But I'm talking about these tactical traders who are coming to the picture, and you have to understand what happens in a basic IPO offering. So the first phase of that is, of course, it's the hype. What happens is that people are so enthralled about an IPO coming in. They see that sometimes on opening day that it can mark up quite well. And so there's a tendency for IPOs to streak, especially if they're well priced. Now, if they're very, very expensive, then the ability for this to streak might be limited. So it's also important how the pricing manages to be able to account from this. So if people just price their IPOs at crazy prices, then they might just push it for one day, and then you'd see it succumb to some profit taking right away. But ideally, after the streak, hopefully it lasts several days, what will happen is you want to take advantage of this by selling some of the positions that you bought. You don't have to sell everything. And then what happens is understand that a lot of people who are moving to that IPO have not a chance to accumulate yet. Interested parties are only getting about the allocations they're given, so they don't really have such a big scope of a cash hoard for them to be able to play around with. So what happens is these people are probably waiting for the market to correct to be able to look for a next opportunity to pick it up. So it goes through a period of distribution. It could also possibly be that the insiders or people who own the company, if the prices go even more than what the IPO price was, if they're already willing to sell the price at the IPO price, what more if it goes higher? And so there's this natural tendency to distribute that stock at that very pricey move and generates a very heavy decline that could come into your stock. But this comes after this streak and blow off. And so what happens is this could last for a little period of time because I don't think the people who've managed to be able to take some profits here will buy it back immediately or at the IPO price. They probably want to see it much lower so that they can get a good variation in terms of that price difference from where they are. Now, if you're going to be the type to just hang on and hope that prices will turn around, like I said, you better strap yourself in because it could take some time because these are the oncoming phases that would normally come in. So an accumulation phase will come after this decline sets in distribution. Consolidation will normally have to generate an IPO base, and that could take weeks, it could take months. And in that aspect, you really will have to be quite persevering in that ability to do it. Every once in a while, you probably see some rallies, but like I said, this will be like a little bit of a quiet riot, not too much play, but on an occasion you get some activity there as well. But the real time to enter really is when the trend reversal comes in, where you see after the consolidation pattern that you see prices manage to rupture above the high band of that consolidation base, and this is where a much more striking rally can come in that will be more meaningful for you. Now, I laid this out because I just want to make sure that you guys understand what the regular process comes in. Now, if an IPO comes in as really in demand, or maybe even REIT, which is a little bit new, I hope it doesn't follow this, and that gives a lot more people a chance to be able to just hang on to it and for the dividends. But just be ready, because if you were to look at what we've seen so far, if you look at Merrimart, Axelum, Cap Wealth, and in Fruit, and if you notice, here comes a surge, a streak, and look what's happening to the price. Look at Axelum, very sharp opening, and then of course prices just attempt to be able to come down. If you look at Cap Wealth, again, shoots up, and then a lengthy consolidation comes in. And as well, even if Fruitas, this was actually doing quite well for a time, and then eventually it also succumbed to that selling, made a major rally, but here we are again. So we have to go through this period of accumulation where somebody comes in, accumulates, and tightens supply, and eventually that will work itself out in good standing as long as the business does its job and produces the sales numbers and revenue numbers that they're supposed to be able to generate that value for the company. So please understand how IPOs normally fare. So in terms of index stocks, I just took a quick look at them and I just tried to categorize things in one simple way of that category. How many index stocks are trading above all their moving averages, and how many of those stocks are trading below all their major moving averages? And you can see the balance scale is quite tipped and into the weaker side because you have a more generous amount of those issues all trading below. And this type of situation is something that we have to be abreast with, because that simply tells us the market is weak, and until we can get a generous amount of these guys start to base out and turn around, and that's the only time that we'll see a much more broad approach into the market. For those who are trading the market, you really want to be focusing on the ones over here first, because the ones over here might take time to turn around or might experience a bout of weakness. And so you really want to focus where the market's underlying strength is first and wait to buy them into nice, maybe measured corrective movements. So I really would think that you have to stay tactical today. April herself said that she's still in a bearish mood into the short term, and there is that opening for a W base, so that means one more reaction is quite possible, and that we don't think that the market would run away anytime soon unless it can generate a break over the 200-day. Take your time and look for potential trades here. You shouldn't be forced to entering a stock, and please don't chase it. right? Take your time. I mean, this is a market where you have the element of time to be able to look for things that you'd like and the position and windows that you want to take. Look for stronger trend conditions, and I think I did the work for you already. I showed you which ones are strong, which ones are weak, and just use that chart to do it. And be careful of breakout failures because this is the time they normally occur. And so we've seen a few of them try to break out and only to be able to whip back inside because they tried resistance. And remember, as Mr. Lee pointed out, we're not in a bullish market, we're in a bearish market. And in a bearish market, we can't be trading very strong upward momentum stocks because they shouldn't exist because then the sentiment is still very weak. And so be very careful about these. Now, if the index breaks below the 6,000 and 5,750 level, and that's the only time we should anticipate the 5.3 to about 5,010, as I pointed out earlier on, and understand that we do still have some potential downside here. And if you are buying recovery rallies, this means these are rallies within downtrends. They tend to be very short-term in duration, so you want to take your profits into those rallies to resistance rather than saying, "Oh, I'm doing good already. Let's just hold it up to the next level." If I would suggest at least lightening up if you really want to do that, so that whatever you lighten up, you can use that capital to buy back into the corrections. And please try to stay away from illiquid stocks because you can see if the market is trading 3 to 4 billion pesos a day and it's really very, very scarce in terms of demand flows, these guys will be very choosy. And those small issues that you guys are buying are not going to stick around too long because once you get trapped there, it might be very difficult for you to take yourself out of that. So be very careful. And this is what I mean about staying tactical. It's not that we don't like those stocks moving forward into the long term, but the short term, there could be some volatility again, corrective volatility, and you have to prepare yourself when you can do that. Save your capital because you're going to need it when you see this reaction so that you can buy your markets back. So we'll just quickly look at some of the issues that we have. So Metrobank, actually, this is one of the top requested stocks that we've had so far. And if you're looking at it, it's actually been showing a very sideways motion, and a smaller pattern suggests either a channel or a wedge that seems to be forming. And it looks like prices are on their way to try to test the lower end of the band. Major support is between 35 and 33. So if you guys are looking for potential buy spots, maybe you could try to reserve and look for that. And like April said, buy them gradually to the support areas because who knows? We don't know how wide he's going to get. If this goes to 5.3 or 5,000, it's quite possible that Metrobank could even break this just a little bit and create a little bit of a scare before rebounding. So just be more prudent in your purchases. You have time to do it. Again, net foreign selling has been very present in this stock, so that's why you can clearly see that the financial sector was quite weak. DNL is actually coming into the narrowing of this particular pattern, which looks more triangular in nature, and it looks like it's starting to be able to narrow off into the range. That means there should be some pressure and support. And if that 470 support structure is broken, then the possibility for a reaction towards 434, even 4 pesos could be around the corner. MPI did well in its rally, but this is major resistance for it. It stopped here where the high was before, and it managed to pull back below all the moving averages again. So that means it's back into this wide consolidation band. Support for this is between 3 pesos and maybe 2 pesos and 80 centavos, which is this blue line that you see here. I'll hold off for here right now because I'm not looking at it to go back down here. I mean, that'll be quite unusual. So I hope that this second support area, 280, can be substantial enough to prevent any declines from here. Jollibee is also pulled back after hitting major resistance, and I think the two support sides will have to be watchful for first at 122 and then falling at 108. I think more of a sideways pattern or a horizontal box might be the one, so the second one might present more stronger conditions. Also because I can already see that MACD is going below the zero line, and that's not exactly very, that's not a strong position to be able to take in. Next, we have BDO, so similar to Metrobank, and also coming through a reactive channel. And the downside from this is looking closer to about 85.60, and maybe if it breaks it a little bit, maybe all the way up to 80. So maybe we can wait a little bit longer. I really hope that it can just stop where it is right now and try to break it over resistance, which is closer to 98, so that the rally that you can generate can climb back towards maybe between 106 or maybe even 115. Ayala Land has also been coming down into a reactive channel. Maybe not as weak as some other property issues, but it does have an REIT coming out. That could be a valuable thing for it, depending on how successful the take up is and how they sell. If it can do that and it can break above 35, then that should be able to get the rally going, maybe looking closer to about 37.90 or maybe even 40. But major support right now is at 31.25. And again, if that cracks, then I've outlined where the next support levels are for Yellow. Macworld's also doing well. However, this last rally attempt failed and it got hit by its resistance. So it's back into this consolidation range. And we really have to be watchful of the 3 peso support range, because a break of that will probably cast it between 285 and 250. So be watchful of this. This is at a crucial point, and we hope it can hold, because if not, then it'll probably start drawing all the other consolidation patterns like we've seen with the others. Now, Ditto has actually been a heavily traded stock amongst our COL clients, and unfortunately, yesterday we did see a crack over the essential support area. I think it may have rallied a little bit earlier, but right now it doesn't change the fact that we're in corrective territory. And unless this can push over maybe 313, then this corrective condition will remain. And I'm a little worried because it is breaking through a trend line. Moving average is also breaking. Your MACD about to go below 0. These are not good conditions. So I really hope that this is the end of it and that it can rally further. If not, because we're going to be seeing something that could cast prices between 248 and maybe even 213. GT Cap also looks like some of the banks we looked at, also in a reactive channel. So as we called out to the other side, pullbacks maybe towards 421 or 400 could be the next support range to watch out for GT Cap. Ayala Corporation also relatively strong, as we saw also a little bit like Ayala Land, but a little stronger. But again, this rally attempt failed, and so we're still seeing lower highs. And that means that it's quite possible that we could just continue on with a reactive channel that may draw itself up here. 716 is the next major support zone for this. If that is broken, then a pullback between 653 and 605 might be next for Ayala Corp. It needs to break 770 to be able to generate much more lift to allow itself to extend its rally. And we have Globe. Globe changed a little bit of its pattern from a horizontal box that we had here initially. Then it started to be able to generate more of a reaction on a channel. And it recently bounced off the low end of that range and is trying to work itself back to the top end of that range, whose resistance is closer to 2200. It seems to be encountering some pressure where it is right now, because this is where the moving averages are. But MACD still shows that it's on rally mode. So let's see if it can work itself all the way up to the next resistance zone. And I would just range trade this band for the meantime, put a major stop into the low end here, which is at 1980. Okay, so I've covered up most of the technical issues, that some of the things that April covered and some of the things that some of you requested. But if any of you guys do have any other questions, then we'll be more than glad to be able to take them up into the Q&A segment. So with that, thank you very much again, and hope to be able to entertain your questions in a good way.